Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, March 13th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I always start with the big picture. It does show the longer-term dynamics, which tend to rule, so to speak. It is the undercurrent of the market, if you will. And that is to say, well, there's a couple things to say about this. One is that we've already had our bearish rotation that occurred a couple of months ago when we came off, about 3 months ago, when we tested channel resistance at 248.79. Following that, we fell to channel support that is presently at 165.85. Now, having tested it essentially about a month and a half ago on the daily chart, I think we tested it almost to the very tick. Now lower at 165.85. We're mentioning that 248.79 is attainable over the next 3 to 5 months or sooner. We use the word attainable very specifically because I don't want to use the word expected. That becomes expected if we have a buy signal on strength following a settlement at the end of any week above this narrowing band of what I would call near to midterm resistance in the 204.56 to 214.66 region. A descending channel top based on recent activity over the last month and a half, and a newly formed descending 1/3 speed line. I say newly formed because it is based on the low that was put out actually on Tuesday, which is the lowest this market has been since the July 23 high. And so we have a new descending speed line on the weekly chart at 214.66, 204.56 precedes it, respectable channel resistance. That is, at this point in time, I don't yet want to call it a 3 to 5 week objective until we actually test 165.85. If we test 165.85 over the next few days, and it is anticipated as a 1 to 2 week target, by the way, below 192.72. So I can back up a little bit and remind you that about a week ago, we closed below the speed line at 192.72. We also, the very same day, closed below a channel bottom that I think today, do we show it anywhere? I do not actually. We had a kind of a double sell signal the day we closed below the 192.72 speed line. That set up a 1 to 2 week downside objective that we are a full week into now of 166.56, which is the same channel bottom on the daily chart that we find on the weekly chart at 165.85. And so that kind of gets us into the 1 to 2 week time frame. This 192.72 resistance, if tested over the next week or two, and I'll give you that signal in a moment, can contain weekly buying pressures. And from there, we could fall away within a couple of weeks back to 166.56. But once we test 166.56 again, this formation, I will begin speaking of this 204.56 to 214.66 region as a likely 3 to 5 week target. And so if you recall, several weeks ago, we came very close to testing what was then a different speed line. We did actually test it in terms of the 1% zone, and it was lower because it was based on the previous low from about a month and a half ago. And when we were testing that, I'd mentioned how downside, you can anticipate 165.85 as a 3 to 5 week downside objective, a likelihood that became confirmed, underscored when we violated the 192.72 speed line. So there we are. Let me go into the day itself. We have a newly formed channel top at 182.23 that, if tested, can contain session strength, and I will say below which we can fall to 166.56 over the next 3 to 5 days. So I see 182.23 as kind of a 3 to 5 day pivot point, below which 166.56 is likely. And if we happen to close today above 182.23, 3 to 5 day rally to 192.72. This could be within 1 to 2 days. It could also take the better part of a week. 192.72, this former speed line rising. I like it still because it coincides. It was coinciding with the 50% upside. Now it's more like the closer to the 5/8. It's kind of in between the two right now. I'm talking against the February high and Tuesday's low. And so it is still a valid resistance area that becomes a 3 to 5 day target if we close today above 182.23. So, if you're a 3 to 5 day swing trader and you're anticipating 166.56 and we close above 182.23, my suggestion is to reverse and go long, anticipating a 10-point rally roughly to the 192.72 speed line, where you could take profits and a short sale assumed, going short then back into the mid 160s within a couple of weeks of doing so. Now, in terms of whether or not we can expect a test over the coming weeks of this more meaningful 204.56 to 214.66 region, I think the answer to that is yes. If we close above 192.72, that would be a buy signal on strength. And under that scenario, probably 3 to 5 days later, that 204.46 level, which is the same formation now on the daily chart that we find on the weekly at 204.56. So, I'm going to kind of articulate this again because repetition is important. As we're testing 166.56 over the coming days, presumably, I'm going to begin speaking. I think you can set up for a 204 handle roughly target over the following 3 to 5 weeks. That could mean, liquidating, for instance, 165 strike puts that you may have acquired over recent weeks. It could mean reversing and then reaching for 204, 200 strike out of the money calls that don't expire for I would go at least 2 months out, 3 months out on that dynamic. That is the 3 to 5 week swing trade. 3 to 5 days is different, as is 1 to 2 weeks. And I don't mean to dice it up so it gets confusing, I know. Some of you expressed confusion in the YouTube comments, and I regret all that. But from my days on the trading floor years ago, catering to pit traders and off-floor, position traders, funds and such, I do know the value behind breaking things down into their time frames. And then you just kind of, I'm not trying to suggest that you should change your time frame. If you're a 2 to 3 week swing trader, I'm delivering you that information. I'm not suggesting that you should become a day trader or a 3 to 5 day swing trader. And the inverse is true as well. If you're a 3 to 5 day swing trader or a day trader, I'm not suggesting that you hold positions for weeks on end. But I do try to present the different time frames because the market does operate inside of time frames inside of larger time frames, inside of larger time frames. Let me continue with the downside today. 182.23 is our obvious resistance. I mentioned how it can contain daily buying pressures, possibly through the rest of the week, and from here we could fall into this mid 160s, targeted mid 160s over the next 3 to 5 days, closing above 182.23. Good low for the week. Over the next 3 to 5 days, 192.72 is expected. Now, downside, I've got nothing but minor points. I've been trying to pick these intraday downside pivot points, and we violate them without any downside follow through. So I'm kind of tired of that, and I imagine you are too. All of these points are properly chosen. They do represent something on the chart, but truth is, holding below 182.23, we could test 166.56 today, perhaps. Not expecting it, but it is certainly possible. And closing above 182.23, I see no good reason to be short Tesla through the rest of the week if your time horizon is 3 to 5 days out, because over that time frame, 192.72 is likely. Finally, downside. Now, I don't see it happening this week, but we're getting close, and it is certainly possible that if we do close this week, Friday, below 165.85, it should be by a full 1% margin of 164.20 or lower to set off our next significant long-term sell signal. Until then, I do think you can bottom pick the mid-160s in anticipation of bullish rotation back into the 240s over the coming months. But once again, closing the week at 164.20 or lower, no good reason to be long any of those out of the money calls. I do think you should then reach for perhaps, I don't know, 80, 90, 100 strike out of the money puts that don't expire for at least 6 months. I give this about a 2 to 3 month play to the downside if that were to occur. But until then, this is a solid zone of respectable long-term support. I am going to leave it at that for Wednesday's Tesla report. Please click like, share, subscribe, check out wickedstocks.com. I'll be back tomorrow with Thursdays, and you have a great day.